JBlog, 31st of October 2010. Starting out looking at a very long-term chart of the Dow Jones Industrial Average going back all the way to the 1900s. And I believe it's a good idea to look at this long-term chart and look at the trend lines that are in place on this. There was this trend line that held until the mid-40s right here. And then there is a boom that happened that started mid-Second World War, went up, touched again this trend line in the 80s, 82 basically, these are the lows of 82, when the S&P 500's PE ratio was down at, I don't know, 6, 7, 8, somewhere around there. And then it accelerated from here. There was this boom here, the 90s, that we're familiar with, that most people are familiar with. When they talk about the way it always was, they're talking about this period. Well, there were other periods in the stock market, and it certainly has not always gone up at this rate. Like, for example, this period here between 1960 and 1982 was pretty well flat, and that's a long time to be flat. People lost general faith in the stock market at that point. And then of course we have this drop here, which is nowhere close to the 1929 to 1932, 33 drop, and then the recovery. Realistically, the Great Depression did not end until the Second World War. So if we look at this trend line here, realistically the Dow Jones could drop to 4,500 and still be on trend. It could drop, of course, if we look at this very long-term sort of pre-inflation, pre-going off gold standard Dow, it could drop below 1,000, and there are those who argue that the Dow will once again get back there. As for me, I think we will at some point return to this particular trend here, simply because the Dow Jones and gold meet once in a while, and it makes sense for gold to go at 2 or above 4,000 and for the Dow to come down to 4,000. Now obviously the Dow might go to 5,000 or 6,000 and gold might go to 3,000. It's not always a one-to-one, it's close to a one-to-one, but there is a relationship there. Right now that relationship is of course very high. But eventually those two usually meet, and that's where fair market value once again comes together. Looking at the last 20 years on the same chart, we have of course the very dramatic fall and the dramatic rise over the last few months after that. But again, this is nowhere close to the Great Depression, and there are those in the double dip camp that believe that this wasn't all she wrote. So let's just look at the last year. Now if we were to drop here, we would have a double top. Down here we had sort of a head and shoulders, and we will see whether there's actually a drop. Now from my personal feeling, but then you know I'm bearish, there is all kinds of weakness starting to show in this here. Stochastics is starting to roll over. Not that they've never rolled over and then not, I mean a fake rollover, but after a long run like this, if they do roll over, there's usually a dip here. So this stochastics here is showing us a sell, a potential sell sign, and we'll see where that goes. Other things, now this is, I came across this the other day. Don Herald actually pointed this one out. An ETF that trades the VIX, VIX, the volatility index. So there is an ETF that trades short-term futures on the VIX, and the VIX, the VXX is currently trading at 1310. Don had a buy recommendation short-term on this. I'm looking at this chart and I'm thinking to myself, I like this. So basically what I did is I actually bought a long-term option on VXX. Going into 2012, you can buy the 13 strike right now for less than $5. I figured something bad's going to happen between now and 2012 that is going to drive this VIX back up high. It might be something. It doesn't even have to be something bad. It just has to be something dramatic. There has to be more volatility. I'm betting that in next year we will get more volatility. So I took an option position on that with the strike 13, and we'll see where that goes. That's just basically some protection, long-term protection, just because the option is cheap right now, and I don't mind holding that. I think it's crazy to actually sell an option, long-term option that long on something that can be this volatile. I mean, this particular ETF has traded as high as 120. Now, obviously, the reverse ETFs, so the future ETFs, have a problem because they lose value over time because options need to be rolled over, and there's a loss every time they do. But the VIX has just come to a point where it has become too cheap in my mind. Let's look at another view of the VIX in stock charts here with a few more indicators. This is 6-month VIX, and it's very much going into a wedge. It is consolidating in terms of volatility. It's funny that a volatility index could become less volatile, but it's definitely converging. It doesn't have that much further to go on the downside, but it definitely does have space above. Here is potentially a breakout. There's potentially some volatility coming up there. So I like that. Stochastics are getting strong on this one as well. So it's just it's a guess. Basically, it's a low-term risk with a high potential for return. Oil. Oil has done basically nothing after this run up here. It's going sideways. It's been going sideways since October. It doesn't know where it wants to go. The interesting one here is natural gas. I had a buy recommendation that I emailed out a while ago, like a few days ago, on natural gas. I just figured that when it dropped down to here, that is entirely too cheap. Winter is coming. Why not buy some natural gas? And that certainly has paid off in the very short term. Natural gas usually hits highs in February, so I'll just sit on a bit and see how cold it actually gets. Gasoline has done very little. Gold has kind of spiked. It looks to me like this is overbought. I mean, look at this RSI. Overbought. It dropped off. A little rise on Friday again. Same in silver. A little rise in Friday. Actually does quite a substantial rise. But this looks very parabolic. It looks very much like a top blowout. I love gold. I love silver. I own the physical stuff. But at times it is too expensive when it's on page 1. You really don't want to have it anymore. You want to buy it when it's on page 30 and sell it when it's on page 1. Everybody's talking gold right now. Everybody hates the US dollar. I'm buying US dollars and I'm selling gold. And I'm buying volatility because volatility, I believe, is heading up. So we'll see. I might be wrong. If I'm wrong, I lose a little bit of money. If I'm right, I make a lot of money. So the risk-reward ratio on that one is, for me, is not bad. What else do we have? Apple. Apple is almost looks like it wants to roll over a little bit, and there's lots of stocks right now that are showing me the same level of RSI at a higher high. So it's a higher high physically, but it is the same or a lower high. It's not as strong as it was before, and this could potentially be rolling over. Now obviously Apple is the ultimate consumer stock because they make things that consumers love but don't really need, and it still baffles me how much money this consumer actually has and what they're willing to spend it on. but eventually that might change. Still love my uraniums. I've talked about uranium now for a while. Uraniums have picked up quite dramatically, a lot like a lot of other stocks as of late. And I'll just talk about one of them, Cameco, just because that's one that is very available across borders. Let me find it. Here's Cameco. Cameco is a nice solid company, a P/E ratio of 20 or so. This stock can quadruple in the next couple of years just on the increased price of uranium and on their resource that is increasing. I own Cameco, I own lots of uranium stocks. I've been owning them for a very long time. The argument makes sense, and it is not on page 1. It's nowhere close to page 1. It's page 30, but some of these uranium stocks have really gone ballistic. They have doubled. Some of them have doubled in the last 3 months. It's quite crazy, and that's partially because the price of uranium has gone through 50 now. People are sitting up and saying, hey, what's going on? So I like that. Basically an unknown. P/E ratio 2161, dreadfully expensive. S&P 500 is definitely overpriced. Dividends 1.86, better than T-bills, yeah, I suppose, but still. Earnings have been going up, yes, but there was this big dip and there was this rally up. Now everybody's happy, but basically we're back where we were before in terms of earnings. Inflation rate supposed to be 1.14%. I don't know which planet they live on. My inflation rate certainly isn't that low. What else do we have? Some news items here. Banks are not making as much money as they did during the last 10 years or so. It's not as easy for banks to make money anymore. Here's a Japanese bank that is not making as much money anymore. Other ones aren't neither. It's not that easy. People on Wall Street aren't as brilliant as they think they are, and certainly they're not brilliant enough to justify their compensation packages. Here's one. Let's forget about that. I love the probably always. Find lots of probably in the news right now that spells hope, and the saying is descending the slope of hope, climbing a wall of worry. Well, we're definitely have the hope words out, so we're still in the descending. Um, I love more language that I love. Cash hoard of $1 trillion. Hoarding. People who don't spend money are hoarding. They're evil. Um, I don't know. Saving money is a good thing, not a bad thing, but that's certainly not how the press puts it. Capital goods orders decline. There's all kinds of press is very bipolar right now. They can't decide whether they're coming or going. Here's another one, probably picked up. Recovery in building is forecast for 2011. All kinds of hope, and not much behind it. I continue being short, except for uraniums and natural gas, and a few other resource stocks, gold, silver, and so on. But generally, I continue being negative. There have been lots of dips lately that were caught. I believe things are being kept quiet until the election is over, and then we'll see what happens when the gloves come off. Anyways, good luck next week. Happy trading, and I hope you make lots of money. Bye.